I have prepared a schedule that combines these 7 schedules together to show how the information flows through them. You will see in the first step here, the Schedule G, the opening GST payable per the integrated account is brought forward automatically, and you have worked out these yellow coloured figures which were GST processed and GST paid. The closing GST payable is automatically derived from those figures. So in the first step you worked out GST assessed and GST paid. Proceeding to the next step, Schedule G1, you made sure that those figures were right by reconciling the portal account. Step 3 was a matter of working out the client's outputs tax and inputs tax. Again, Schedule T was partially populated, and you had to go through and work out the net GST processed on that schedule. That gave you a net GST processed estimate that can be then compared in step 4 on Schedule T1 with the actual ledger. The only figure that had to be entered on Schedule T1 was the closing GST balance. The next schedule, Schedule T2, or the 5th step, did not require any input from you. It automatically had worked out the timing differences from previous schedules, and the GST processed per the ledger is known, and that is compared to the GST assessed on Schedule G. Any discrepancy there would require explanation. The 6th step is the optional reconciliation of the general ledger to the BAS returns, and the 7th step, compare the GST ledger account, analyze it into GST that's owing at the end of the year, which is item A from Schedule G, and the effect of timing differences if the client is on a cash basis, which we saw were detailed on Schedule T2. That shows the 7 steps that the work papers have for processing a client GST account. Let's have a look at if there's any, all the figures that we have put in here are properly reconciled, but what if there were some errors where the client had incorrectly processed GST or incorrectly assessed GST? Let's consider that situation. Let us assume, for example, that instead of assessing $35,000, the client had assessed only $30,000. This may be an error, or maybe they pay by instalments. There could be any reasons why this is so. But let's see what happens when the GST is under-assessed. You'll notice that Schedule T2 now shows a discrepancy of $5,000, being the amount that has been short assessed between the BAS returns and the general ledger. You'll notice that this amount now appears as a reconciling item in our GST account. The other common error, or thing that we want to gain assurance of, is has the ledger processed all the GST for the period in the correct manner. Let's see if we find an error here. On our review, we find that the client's inputs should have been $31,500. You'll then have a discrepancy in Schedule T1 of $1,500 that needs explanation. Should either of these two errors arise, there'll be opportunity on the schedules to explain your disposition of those exceptions, how you're going to deal with them. Just highlighting the difference between GST estimated and GST actual. On Schedule T, your working out an estimated GST processed, and you're doing that by identifying the sales, the taxable sales, and taking 10% on top of net sales. Likewise, with inputs or payments that are made, you're identifying the GST component and getting a net GST processed estimate. This is then compared to the ledger actual net GST processed, which is worked out very simply and quickly by taking the opening GST payable or refundable figure, taking off the closing GST payable or refundable figure to give the net increase or decrease in the GST account for the period, to which you then add the amounts of GST paid for the year, and you will determine very accurately and quickly the net GST processed in the client ledger. Any discrepancy between these two figures is an amount that you don't understand. It could be a problem in your estimate, or it could be a problem in your in the ledger itself. Until you have resolved what these differences are, you should keep investigating. Let's just review briefly how each of these objectives has been obtained. The first objective was to gain assurance that GST tax has been correctly recorded in the client ledger on all transactions. As we just saw in GST processed, but also on Schedule T1, that the discrepancy, an unexplained discrepancy between net GST processed in the ledger and our estimated net GST processed is a difference that has to be explained. When that difference is eliminated, you can have satisfaction that objective number 1 has been achieved. Objective number 2 was to gain assurance that the GST has been correctly reported to the ATO in BAS assessments. Again, on Schedule T2, any difference between the ledger, even allowing for timing differences, shows up as a discrepancy on that schedule. When that discrepancy has been dealt with or explained, then you can have Objective 2 satisfied. Objective 3 is to reconcile the GST balance sheet account to ensure that it actually shows the amount of GST owing or refundable at the end of the period. Often I find that there's an error in the brought forward GST account, and I'll quickly illustrate where if instead of having the correct figure here, which was 14,000, and that's made up of the GST owing at the end of the year on the integrated account, plus the effect of timing differences, that's items D and E, that 14,000 credit is the correct figure to have here. Let us suppose, however, that it's a new client and the GST account was wrong. Let us assume that it only showed $13,000. You will see that this shows up as an error in the GST reconciliation of the GST account on T4. This error can be rectified by processing an adjustment in the current period, and that any such amount should be noted as a prior year adjustment on Schedule T, which will fix the problem.